Nike stock is trading 45% below its 52-week high right now, and at the exact same time, Adidas just did something Nike has not done in years. Both teams that made it to the World Cup final were wearing Adidas. Same industry, same customers, same year, one company is bleeding and the other is quietly taking the crown. So today I'm going to show you exactly why, and more importantly, what the money is telling us before the headlines catch up. Here's my conclusion before we even get into the numbers. This isn't about shoes. It's about who actually executed a turnaround and who just talked about one. Adidas cleaned up a billion-euro inventory disaster, rebuilt China from scratch, and is now trading at a cheaper valuation than Nike, even though it's performing better. Well, why should you watch this? Because if you understand what just happened between these two companies, you'll understand exactly how the market rewards real execution over brand hype. My name is Moon, and I obsess over where money actually moves, not where headlines say it moves. If you've ever looked at a stock price drop and wondered whether it's a warning sign or a buying opportunity, this channel is exactly for you. Hit subscribe, and if this helps you, drop a like. Here's what most people still believe. Nike is the biggest, so Nike is still winning. True, Nike still makes more total revenue than Adidas, but size and direction are two completely different things. In Nike's most recent quarter, Greater China revenue dropped 17%. In Adidas' China business, revenue grew by around 10% in the same period. That's not a small gap. That's two companies in the exact same market moving in opposite directions at the same time. Let's actually look at the money. Nike stocks is sitting around $44 right now. A year ago, before the drop accelerated, it was trading closer to $70 or $80. Adidas, meanwhile, is trading around 176 euros on its home exchange, and it's down only about 7% over the past year. Not 45%, 7%. Think about that gap for a second. If you'd put $10,000 into each company a year ago, your Nike position would be down roughly $2,000 to $4,000. Your Adidas position would be down maybe $700. That's the part most people never actually calculate. They just hear Nike is struggling and Adidas is fine as vague headlines, not as real numbers hitting a real portfolio. So here's what people really don't know. This isn't just about shoes selling better in China. It's about who the institutional money believes will actually recover. Even though Nike is trading at a lower dollar price, it's actually more expensive relative to its earnings. Its forward valuation multiple is around 22 times earnings. Adidas is trading at around 17 times. Here's the simple version. Imagine two houses on the same street. One is falling apart but still priced high because people hope it gets renovated. The other just finished renovation, works perfectly, and is priced lower because nobody's paying attention yet. That's Nike and Adidas right now. The market is still paying a premium for Nike's hope of a comeback, while Adidas, the one that already came back, is quietly cheaper. And remember that World Cup detail from the beginning? 0 Nike-sponsored teams made it to the final. Both finalists wore Adidas. That's not just a marketing story. That's the same pattern showing up in a completely different arena. So why did Adidas actually pull this off? It's not luck. There's a very specific decision behind it. Back in 2023, Adidas had a real crisis. After cutting ties with a major partner, they were left holding about 1 billion euros worth of unsold inventory. That year, they actually posted a loss per share. Let me tell you who was actually running the show, because I honestly think this is the single biggest reason Adidas won. Bigger than any shoe, bigger than any campaign. Adidas CEO Bjorn Gulden wasn't some finance executive parachuted in from a bank. He was a professional footballer first, playing in Germany's second division and in Norway's top league, until a knee injury ended his playing career in 1988. That athlete instinct, read the field fast, decide fast, adjust fast, is exactly what he brought into the boardroom when he took over as Adidas CEO in January 2023, right in the middle of this exact mess. And the very first thing he did was almost unheard of for a company this size. At his first town hall, he handed out his personal cell phone number to all 60,000 Adidas employees and told them to call him directly if something mattered. Then he did something even bigger. He flattened the management structure, cut out the layers that used to sit between an idea and an actual decision, and gave small teams direct authority to act on their own. Before that, insiders reported that a single product launch inside Adidas could take over a year just to get approved. By the time a decision made its way up the chain and back down, the market had already moved on. Here's my honest take, and this is purely my own read on it. I think that structural change is the real reason Adidas turned around this fast, faster than almost anyone expected. When your CEO is one phone call away and your teams don't have to wait for 5 layers of approval, you stop moving at the speed of a memo and start moving at the speed of the market. But that's not a branding advantage, that's an operating advantage, and operating advantages show up directly in the stock price. And that speed is exactly what let them clear out a €1 billion inventory disaster this fast. Watch what happens next. Most companies in that position spend years quietly discounting inventory and hoping nobody notices. Adidas did something different. They cleared almost all of it out by the end of 2024, took the hit fast, and moved on. And the result showed up almost immediately. By 2024, earnings per share rebounded to over €4, a full recovery from that loss. By the second quarter of 2025, earnings per share jumped 86% year over year. Compare that to Nike, which is still guiding investors to expect declining sales through at least the first half of next fiscal year, and whose recent margin improvement came mostly from a one-time $986 million tariff refund, not from the actual business getting healthier. So here's the real difference. Adidas took the pain fast, fixed the actual problem, and let the recovery show up in real earnings. Nike is still leaning on one-time accounting boosts while the core business keeps shrinking. So what do you actually do with this information? First, don't make decisions based on brand loyalty. Nike being the bigger name doesn't mean Nike is the better position right now. Second, watch the earnings quality, not just the headline number. Ask whether a company's improvement is coming from real sales growth or from a one-time item like a tax refund or a tariff credit. Third, if you're already holding Nike, then this isn't a panic signal. Management itself says they're in the middle innings of a multi-year turnaround. But go in with your eyes open about the timeline, not the hope. And fourth, if you're looking at Adidas, understand the risk is that a lot of this recovery story may already be priced in after a strong run. Do the homework before you chase the World Cup headlines. Now, some of you are probably thinking Nike is still way bigger. This comparison is unfair. And you're right that Nike still generates more total revenue. But the stock market doesn't price a company on its past size. It prices a company on where the money believes it's headed next. That's exactly why Nike's stock fell so much further than its actual sales decline. That gap between how much the business actually declined and how much the stock declined, that's the market pricing in fear about the pace of the turnaround. And fear, historically, moves faster and further than fundamentals. And so here's the bottom line. This was never really about shoes. It was about which company actually fixed its problems and which one is still hoping the problem fixes itself. Adidas showed you what a real turnaround looks like. Take the loss fast, fix the actual business, and let the numbers speak. Nike is still writing that chapter. If this helped you see the money behind the headlines, subscribe so you don't miss the next one. And if it was useful, tap that like button. It genuinely helps this channel grow. Until next time, protect and grow what you've built.